Hello everyone, welcome to today's video. In today's video, we will be discussing about one of the most talked about sector in recent days, that is FMCG. Yes, there are a lot of news are doing the rounds about this sector. We will be discussing in detail whether the correction will continue or should we enter the stock or should we exit the positions. We will discuss in details. Most of the FMCG stocks have been corrected around 20 to 25%, and in this video we will be trying to figure out the reasons for this fall. Is there any fundamental issues with the stocks? Absolutely no. Majority of the FMCG stocks are fundamentally sound, be it HUL or Marico, Dabur or Colgate for that matter. Then where is the problem, you might ask? I see there are two things. One is high input cost pressure due to the inflation in the commodity prices, and the second being there is an entire market sentiment is negative across all sectors. Now let's see how this high input cost impact the margins of a company. We try to understand this with an hypothetical example. Let's say Hindustan Unilever is selling a 1 unit of shampoo in the market at a price tag of 10 rupees. And let's say the expense incurred to produce 1 unit of shampoo is 6 rupees. In this example, the operating profit is 4 rupees, that is 10 minus 6 is equal to 4. The calculation of margin is simple. The formula is operating profit divided by the revenue generated from the net sales. That is, in our example, 1 into 10. 10 is the revenue generated and 4 is the operating profit. That comes to 0.4. If you convert into percentage, that is 40%. Now let's see the same example with the current scenario. Okay, now let's consider commodity inflation has happened and the prices of the raw materials which is used to make the same bottle of shampoo has increased. Now for HUL making 1 unit of shampoo, the operating expenses will be 8 rupees instead of 6 rupees. Now the operating profit is only 2 rupees, and if you calculate the margin, it comes to 20%. Sudden dip of 50%, isn't it? From 40% to 20%. This is called as margin pressure, and currently all the FMCG stocks are facing the similar issues. Is this the new problem? Absolutely not. In the past also same scenarios has happened and companies have dealt with this. Now we'll see how companies will deal with this high input cost pressure. We'll try to understand this with this diagram. Generally what companies does is they pass on the input cost pressure to the customers, but again they cannot completely put the pressure on the customers or the consumers. They also take some other measures like various cost control measures. They will spend less on ads or promotion activities, etc. When companies decide a price hike in order to manage the operating margin, the other problem will arise, that is volume growth will be declined. Volume is nothing but the number of units they are selling. So when the prices are increased, it's obvious that their volume is going to decrease, especially in the rural areas. People will limit their expenses. In the scenarios like this, the companies like HUL, Marico or Colgate will have a competitive edge because they have the pricing power. People will not stop buying their products even if they increase their product prices. Once the prices are increased, they are not going to reduce the prices even when the input cost material normalize. So this will benefit the companies. The conclusion is input cost pressure will remain volatile for short-term period, but mid-term and long-term outlook is very promising and it is intact. And more importantly, the company is already corrected 20 to 25% most of the FMCGs, and I think this is the time to accumulate these stocks. I am putting the charts of few FMCG stocks which looks attractive to me and currently trading at very strong support zone. My advice would be don't put all your money at once. If the stock further corrects, you can consider add more quantities, and I don't see any problem in downward averaging in the stocks like HUL and Marico. Again, this is not a buy or sell recommendations. Please do your due diligence before investing in any stocks. And if you like the content, please press the like button and subscribe to my channel. That will motivate me to make more of such videos. Thank you for watching.